The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the June 8th, terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in right this very second, 877-927-6648. Of course, you can send me an email, steve@tfnn.com, just up in that heading line. Put radio show question, and I ought to see it. We'll answer it during the show. And, of course, inside the Tiger's Den, an instant message, any ping will do. So let's go ahead and get this show started on terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, the Dow trade up 59 points at 21,232. S&P is up 3 points at 2436. NDX 100 slightly red, down nearly 2 points. Russell 2000, holy Toledo, that is on fire, up 19 points, 1 4/10%. Semis are up over 1% or 13 buckaroonies. To the downside, we've got gold off 14 bucks, silver down 20 cents, light sweet crude up a quarter. Leading the charge here to the outside, it is Alibaba Group up 11% or 14 bucks. You've got SVB Financial up $9, Nvidia Corp up 9, Tesla up 8, Martin Marietta up 6. To the downside, you've got Charter Communications, CHTR's off 11.50 or about 3.5%. New Oriental Education down $8. Tal Ed Group down 8. Vail Resorts down 6.68. AutoZone off $6. So we could take a look at some stocks that are moving. I'm sure that you would like to know where and what are these markets doing? No, they're doing what they're supposed to do. But let's go take a look at today I think we'll do something slightly different throughout the show. Of course, if I have a caller or an email, then we'll go back to that normal just analysis of what it is that you're looking for. But let's first go take a look in essence at the NASDAQ, the NDX 100, maybe composite. We'll take a look at each of the indices. And show you sets of charts that are included in my expanded edition of the newsletter each morning for subscribers out there. But first, let's just start with the NASDAQ, the NQ. Let's look at the equity futures contract. Now, it's rolling over today into September, so we're looking at the September contract. What I want to show you here, we're going to, there are several patterns that identify the little signatures of market tops and bottoms. Remember, you stay inside the time frame chart that you are looking at. In this case here, one of those patterns happens to be a seventh wave move. In this case here, lettered A through G. And in fact, the top that came in so far inside the NQ on a 30-minute basis was that seventh wave move, letter G. Now, all of the bounce attempts thus far inside the NQ have been thwarted by Stevie's red line. That's that oscillator unchanged line. Now, that price oscillator is still above zero. So it just means retracement that is underway. However, if that falls below zero and price remains under Stevie's red line, then you've got something a little bit more serious. More serious on a 30-minute chart out here. But at this stage, there is a topping pattern. It's worked. Price fell right to support. You see those red dashed lines on my screen at the bottom out here? Those are key support levels. So if you're wondering what those are, and when we take a look at your stock or some stock that you're interested in, on a different time frame. And, when I provide you with levels of support, you're going to notice that I'll pick out those as one of the levels on a decline. Same thing would be upper resistance. There's no resistance here to show you on this chart. But thus far, the NQ 30-minute chart did what it was supposed to do. Now let's go ahead and up it once. Let's up it one. Let's go take up it by 4. Let's go take a look at a 2-hour chart. So we go from 30 to a 2-hour. Now in the 2-hour chart, another pattern that you and I like to look at for potential tops and bottoms is with the price moving higher, doing less relative energy. In this case here, that's the black diagonal lines that automatically get drawn because of an indicator tool that I've built, so it's customized to meet my specific parameters out here. And we can see that price is moving higher, doing less relative energy, and then we had that nice little key reversal session, bear sash candle as well out there. And you can see that on the 2-hour chart, price staying below Stevie's red line, the 58.90. So on this chart, price did not fall all the way back to support. Support would have been that red dash line at about the 58.45-ish type level out there. At this stage on this chart, it says there the NQ has more work to do to the downside. That's what the 2-hour chart says. Remember, the NQ, in essence, has led things up. The question is, will they lead things to the downside? If, in fact, that's the case out here. Don't know that to be the case. If we look at the 5-hour energy drink chart out here, we can also see that price was moving higher, doing less relative energy. It, too, has a key reversal session. So if, in fact, now this fell down to a level of support of its TAS profile in the 58.60 area. So that would be a level that you'd be watching for, because anything below 58.60, this pattern on a 5-hour basis will go ahead and kick in, and price will head down into that 57.80 area. So you've got the NQ that's really showing thus far weakness on 3 different time frames. The time frame that matters most is going to be the daily. And this won't matter a lot until we get to the end of the day. And there you've got Stevie's red line. We're not that far away. It's right now, I'm going to have to put my data box up in order. I don't want to give you any bad information out here. 58.76. Use 58.76 as the number. We're trading at 58.84. So you're only about 6 points away. Any close below that, we've already tested and rejected thus far. So the daily chart is saying not so fast. It would have a different message if it, in fact, closes below Stevie's red line. The preference here, for those of you that are bears out here, would be to see it close below yesterday's open, right around 58.62 out there, because then you'd have a bearish reversal signal. Price here moving higher, doing less relative energy. No bearish reversal signal. That you could get that today. I don't know that you will, but you could get that today. And you want to pay attention to what the leader of the pack is communicating to both you and I. So that is on the NQ. Now, we know the NDX is trading down by a couple of points. So let's go take a look at the cash charts out here. In fact, let's go take a look at the index charts for many different indices out here, so you can take a look at. For those of you that think I am a perpetual bull, you know what I have to say about that? Bull. That's all BS. That's all before Steve. We're going to go ahead and show you a different set of charts out here, because that's not the case. Now, remember, and actually, I don't know if you want to remember this or not, but make sure that so far, everything that I have talked about, everything that I will talk about when we take a look at daily charts, does not impact you long-term investors out here. The answer there is long and strong for a long time to come. Identify where to add to those positions out here. All this other stuff is just noisy noise. But we're going to go look at that noisy noise. We'll get back to this one.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 54, S&P's up 3. Now, for those of you that are short or thinking of getting short, you'll find this next 8 minutes or so very important. And you will, and we're going to go take a look at. You have good reason to be. Again, this does not affect those that are long-term traders out here. But you'll see as we go through these charts here, and you go ahead and you'll keep track of the number of charts, because I haven't done this, but you do it. Maybe somebody will post that in the den. So just keep track of this. How many charts that we look at have potential topping signals as we speak? We'll come back to the NDX. Let's just start with this. I'm going to go in order because of the way that I have these things laid out on my screen out here. But if we take a look at the NASDAQ Composite as an example, let me just go ahead and update this. One thing that we know is that price has been moving higher, doing less relative energy. Now, price must close below Stevie's red line before the NASDAQ Composite gives you a sell signal or potential sell signal. That number, 62.91 and change as we speak right now. You also are potentially in wave number 7. That's in wave number 7 off of the April low out here. So we know at that 7th wave move, there is the potential for us to see some type of change in trend, let alone 1, 2, 3 trading sessions ago, you received a TD9 setup count. And when you get those, they can also be topping signals. So there's 3 topping patterns that are applicable to the NASDAQ Composite. It's just you need to get confirmation. Without confirmation, it doesn't mean diddly out here. Right, you've got to get some type of confirmation. It's like a confirmation hearing of our own out here, and only it's very specific. You close below 62.91, boom, there you go. You got your sell signal. Now, in the case of that 7th wave, you wouldn't get it until tomorrow. You have to have a lower high out here. But you do have 3 topping patterns inside the NASDAQ Composite. Now, I'll just switch over here real quickly, and then we'll go back to the indices themselves. Here, we can see the NASDAQ Composite Advanced Decline Oscillator. That's panel number 2. I'll go ahead and blow it up on the screen. It's above 0. That, too, would need to close below 0. But if you were to get that close below Stevie's red line, I can't assure you, but I can pretty much assure you that outcome would occur inside this chart as well. If it doesn't happen, then you don't have, then the topping signal has not been confirmed. It is basically that simple. Yes, I'm making this as simple as I can. Simple for me. Now, let's take a look at a sector that is on fire out here, the semis. If we take a look at the semis out here, price is moving higher with energy. right? It's moving. It was up until yesterday moving higher with less relative energy, but it too is in potentially wave number 7 to the upside. Now, you're at 1133 today. It would take one hell of a decline, something to really clobber it over its head to get it closed down below the oscillator unchanged line, Stevie's red line at 1111 out there. But nonetheless, it is one of those potential topping type patterns, wave number 7. So that's 2 out of 2. I can even keep track of that. Those are just the first 2. Let's go to take a look at the transports out here. If we take a look at the transports, there's nothing really bearish about this, other than you did get a TD9 setup account set up 1, 2, 3 trading sessions ago. 92.23 is the number to be watching inside of the transports for confirmation of that top. Remember, without confirmation, price will do what? Yeah, it'll go higher to sideways out here. The volatility index, let's not spend any time on that as we speak right now. Instead, let's skip through that. Oh, I tell you what we're going to look at is the XAU. So I'm kind of doing this in my order, so to speak, out here, the order of the way I've got my charts laid out. If we take a look at the XAU, right, so we've got the we're looking at a mining sector out here. The move lower inside of this, you can see that price oscillator at the bottom of my screen right there at that 0 line. Today was a test and rejection of 84.58, Stevie's red line. That is muy importante out there, because if we see this test and rejection hold up, it says that this sector is ready to take off topside. That's the type of test you're looking, especially after that explosive day 2 days ago inside of the XAU. We'll take a look at the other bearish side. Well, the bearish side would be closing below 84.58. I can tell you that would be a real problem in River City for the mining sector out there. Now, you'd want to look at each of your individual equities there, but as a whole, that would be a bummer. Today, though, thus far, that is a bullish test. May not have wanted to see it, but that is a bullish test out there inside of the XAU. If we go take a look at the Wilshire 5000, how often do we look at this? Not too often. But if we do take a look at it, the little TD9 count set up a few days ago. Still today, a test and rejection of Stevie's red line, 25,253. You get a close below that, and then we got some action down to that Stevie red dash line in the 24,900 area out there. But as we speak right now, so potential topping-ish pattern inside there. New York Stock Exchange. What we're going to see here about the NYSE is not a whole lot. All you'd see is Stevie's red line. There's no other topping type pattern inside the NYSE. If somebody tells you there is, they're smoking something. I don't know what it is they're smoking, but they're smoking something. Now, how about the NDX 100 out here? Price have been moving higher, doing less relative energy. Today could be wave number 7. That could be tomorrow, right? But we are in that potential wave number 7 in it. And you've got that. You've already have a confirmation of a top inside the NDX 100. And that was when the evening star formed a couple of days ago. Hasn't been taken out. So that pattern is still in play inside the NDX 100. Where could price take us to? About the 5,700 level. So, again, you're seeing each of these charts that have these topping style patterns out there, and that has awakened the bear. I believe it is our favorite polar bear who put in here he's fairly bearish. So if you're fairly bearish, then these charts here are the type of charts, pattern-wise, that you want to see that go along with the other things that you're looking at, which you say right there is risk-reward in your options market out there. So that must be for good reason out here. And in this case here in the Russell 2000, it's not out here with regard to, other than a test of a previous swing point, that 100% move of a move out here. Which can be a short-term topping. We talked about that yesterday. We talk about it all the time. But no other signal other than, a 100% move of a move out here inside of the Russell. Is the Russell 2000 going to go ahead and drag all the other indices higher? No. Is it good to be a leader and be out front? Yes. But right now it's out front with the NDX 100 kind of saying, I'm not so sure. Not so sure. If we take a look at the Dow out here, the industrials, we'll see we're not going to see a whole lot. It just simply needs to get and close below 21,154 for it to go ahead and confirm perhaps the other signals that we've taken a look at. So you're not getting the topping signal in all of the indices out here, but you're sort of getting the the message of the markets. How about the S&P 500? Tucker, sorry, you missed it. You snooze, you lose. Just like John McCain. Was that guy snoozing or what? And it turned out to be quite a loss. His questioning was kind of off the charts for, I can't follow what you're saying. Where you mean you've been practicing this question for 24 or 36 hours, and that's the best you got out there? Woo! In any event, how about that wave number 7 inside of the S&P 500 that formed several days ago? Still hasn't been taken out, but you got to get it closed below 24.30.37. So you kind of get the gist inside of the indice charts. For those of you, again, from a daily-ish type perspective, from a short-term retracement, whether it's 20 or 30 or 40 or 50 or 60 points. Even inside the S&P 500, it's just a small retracement and a huge bull market. Steve Rhodes with TFNN here.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So let's go back to those charts out there, because we can go ahead and finish this up. I don't know about finish it up, but I didn't see any email requests. And the reason I didn't see any is I forgot to look. So if you did send an email, I'll make sure that I look during that next segment and make sure we get to it. What do I want to switch to next? Hey, how about the U.S. dollar index out here? Let's go take a look at it. Having a bit of a move today. In fact, moving above Stevie's red line and also doing it in wave number G, that seventh wave move. Now, that wave count is all the way back there from early part of April. So if the U.S. dollar index has found a short-term bottom, well, you're going to have that confirmation of that seventh wave today. That would then say that the U.S. dollar index would go ahead and target this Stevie. Well, it'd either be the old red line, 98.93, or even make its way up to the 100.72 level out here. And that's on the U.S. dollar. That's on King dollar. It does look like the king is back in town out there. The second king, though, that would be Johnny Cash. I happened to watch that movie last night. That shouldn't have. Only, it always ends the same way out there. But I like Johnny Cash. The yen. Yeah, we're going to get to the yen for sure, Danny. Absolutely. Let's take a look at light sweet crude out here. What is it doing? A little bit of a bounce today. Now, in the case of light sweet crude, this is interesting with yesterday's washout. And Elvis is the king. There's no question about it. And but the dollar, U.S. dollar, that's also the king out there. And you've got Budweiser, that's also another king. And then you got Burger King. There's a lot of kings out there. And in any event, let's get back to these markets out here. What's interesting about yesterday's washout in light sweet crude is it may just simply have been just that. It did make one of those Tom DeMarco 9 setups, and it was trading inside of bars 5 and 6. And oftentimes that is where you begin to see a change in trend. Now, do we have any other kind of signal out there as we speak and we look at the daily charts? Absolutely not. We just don't have it. But and how would we know if in fact it turns out to be a bottom? You'd see a close up above Stevie's red line. It is that simple. 47.56 happens to be the number. At this stage, that's resistance, by the way, on any bounce. 47.56. So close above it. Then you have a different story. If we look at high-ho silver, all that it did today thus far is get down and test Stevie's red line at that 1727 level. So it remains bullish. You can see how silver now is right sitting smack dab. Can I say smack dab? I just said smack dab. And it is sitting right at that zero line. Now, what that says to you and me, this is really important. Because should we see, now we've got a bullish test of Stevie's red line as that zero line is approached. So if silver moves up from here, what you can expect silver to do, the racehorse silver, is to jump all kinds of hurdles and move to the upside, let alone yesterday was one of those TD setup 9 counts out there. But if, in fact, it's able to hold price, 1727, that is very bullish for silver. Likewise, you have the exact opposite message. You close below Stevie's red lines here, and it is curtains. And by curtains, I mean Jane curtain as well, because this thing could form an A to B equals C to the downside. At a minimum, it says you go back and you test the prior swing point in the $16 area out here. But thus far today, the message is very simple. It's bullish. It did what you would want it to do if you were utilizing this set of indicators out there, which if you're tuned into the show, you are using this set of indicators out here because this is how I'm reading the markets. It has nothing to do with my opinion out here. Isn't that a beautiful thing? We're just simply agnostic to opinions. It's just what are the charts communicating to you and I? And if we just stick with that, then we're good. Well, if we take a look at Goldilocks, 1277.80 is its number, a test thus far. Now, different setup than silver, because in the case of silver, it was dealing with that zero line. That zero line, that tug-of-war line, is really where it releases a lot of information to us. At this stage of the game, closing below 1277.80, not for this reason, but if it were to close below gold, being were to close below 1277.80, then the session from 2 days ago was a blow-off. Was an absolute blow-off type top out there inside of gold. And then gold is going to go ahead and head lower. Now, the first lower is in this 1255-ish area, but chances are you just see it simply just tank, continue to tank, and move to the downside. Now, we know that it's the yen, as Danny pointed out, that's more important than taking a look at the U.S. dollar index with regard to its direction. So let's go switch over and take a look at it. Let me switch over to this chart here, and then we'll get back to some of the other charts. But if we do take a look at the Japanese yen, and this does not bode well for gold. So don't expect gold to jump off and recoup a lot of the loss thus far. And both for gold and silver, you really want want to be watching those levels, those red line levels that you and I took a look at just a few minutes ago. Now, in the case of the Japanese yen out here, let me see if I can get some other profile information out here. Let's go put on these multi-time frames. You know, in order for gold to really get its luster, it needs to crack below. Now we're looking at the currency pair, right? Different than the futures contract. It needs to get below, close below 108.87. That's a key number. At this stage, all we know that took place yesterday was it got down to support. That's the bottom of the TAS weekly profile there, and support is held. So we're really at this critical juncture-ish type time for the yen, for gold, and silver. Now, with regard to the yen, let me see. I've got another chart out here. Well, even though I don't have it, let me just make it. Let me do this here. Let's just come up here. Let's put up this light sweet crude chart. Let's go take a look at the yen futures. Let's go take a look at the yen futures out here. Let's really take a look at both. And so I can provide you with the number inside the yen that you're really watching. That's going to be 0.9042. So just like gold has moved, now gold tested and rejected, silver tested and rejected Stevie's red line. The yen has not tested it. But if it were to get down to 0.9042, it would be a test. If it gets below that, then the message is really simple from the daily perspective. It's saying not even close to so fast out here. It's saying it's going to go ahead and move lower. Looking at yen futures, gold would move lower, silver would move lower. The mining equities, I don't know, they probably move lower, but you'd have to take a look at equities different than you would the actual metals out here. So today's trade, tomorrow's trade is important. Tomorrow's trade, perhaps even more important, because we'll at least have the weekly number out to know whether or not gold was able to break above a long-term descending trend line. Remember, the trend is your friend. At this stage of the game, that trend is really not your friend, being long gold. Nonetheless, I still maintain a bullish outlook for gold on a monthly and a weekly and a daily basis. But boy, that whole thing would change if those lines of defenses are broken. Why? Because I can always change back the other way if, in fact, it was a false break to the downside. But I don't think breaking those levels is really what that message would be. Okay, so we've taken care. So, we took a look at the XAU. We did that, but let's just pull this back out here. We know the XAU was testing my line of support. The GDX, I think, is doing the same. So let's go take a look at it. And so for those of you trading the double, the triple, and so forth, so take a look at it. Today was like a perfect. Now, you got the zero line out there. I hope I'm not speaking too fast, right? We got the bottom zero line. Today was a test at 22.99. I don't know what the exact low was, but you can see testing my red line out here and a little trampoline. So the trampoline effect to the bullish side is truly set up for the mining sector. What we really need, what Danny in Atlanta knows, what we really need is we need that yen to get stronger, baby. Get stronger, baby. Steve Rhodes with TFNN. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks, and hey, I've got my system in my hand here, so I am checking for those emails, see if there's any requests out there, and the answer is no. Hey, how about that? So we've got. I'll just make sure. Nope. I got Tom and John. I take that back. I just had to go a little further. So let's see what John was looking for. It says, what do you see for is it IAC? If anything, let's go take a look, see if this is IAC. It was hard to read the message on my phone out there. Yeah, IAC, Interactive Corp. So, yeah, let's go look at this for John in Sarasota. And, boy, a heck of a move out here. Let me go ahead and get some volume on there. But big, huge, wide price spread. Doesn't get much wider than that. And a big volume. So I don't know what IAC, Interactive Corp, did, if that was just an earnings move. But big, huge sign of strength back there on May the 2nd. Let me go through. Let me change. Let me do this here. I need to change worksheet area so I can pull it up, John, on my other set of worksheets and to see if there's anything out there that shows up. So when you see, what do you see for IAC? I see that, wish you and I were in that. That's for sure. After that move, so we can see that. The what else do we see as far as, hey, where could this pull back to? So the interesting thing has made its high out here. I'll show this to you. So it looks like you're going to get a chance to get in this, whether it's at the 10108 area, which is the bottom of its daily box out there. That would be the first place that I would be looking. But, you know, when things make tops and bottoms out here, they do it the same way. I don't care what time frame instrument you're looking at, what instrument you're looking at. They all do the same thing. It just repeats. And you probably get sick and tired of hearing me show you this and say that, but I don't know how else it is that you and I can call market tops and bottoms and things of that sort. But in this case here, a few days ago, you can see prices moving higher, doing less relative energy out there. And then the old bears showed up, bear sash candle. You can see prices below Stevie's red line. That means that the price oscillator at the bottom panel is falling. Sometimes when it's just kind of going horizontal, you don't know whether it's falling or whether it's rising. Well, with this red line out here, whatever side of price is on, I know whether that bottom panel, that price oscillator, I know whether it's rising or falling. This is to answer your question, John, in the Tiger's Den. By simply knowing that red line calculation, that tells me, in essence, it's called the oscillator unchanged line. The bottom panel is the oscillator. When price is sitting right on it, it means that that price oscillator at the bottom is unchanged. It's not rising or falling. You see, when a price oscillator above zero is rising, there's only one message, and that is that price is going to continue to move higher. The exception there is trying to sell the top tick. This is not a show about trying to help you identify and sell the top tick. Now, we can do that by looking at some other levels of resistance. We're looking at daily charts. I'm not interested in doing that. It's about being able to catch the trend and when the trend may be changing out there. But I can tell you, a rising price oscillator above zero is bullish. A falling price oscillator above zero says retracement. A falling price oscillator below zero is bearish. And it just makes therefore, the calls for you and I very simple. And if we can simplify a lot of this game here that we play, it just makes things so much easier. So seeing that topping-ish pattern that is in play, we then have to go look for support. And the levels of support inside Interactive Corp, well, they're either at the breakaway gap, which could either be the high of May 2nd or the high of May 1st out there. That's a long way down. By the way, that's going to be in the 95, even Steven number, to the high of 84.36. I think what you would do is just simply see how this thing pulls back if you're looking to get into it. If it's pulling back on light volume at 101.08, then what you really have to then do is you got to do the reward risk. Like our polar bear was in essence putting out there in the den. We've got to be able to assess reward and risk out here. And you can do it a number of different ways. If I put a weekly chart out here for IAC, the question is, can we find some type of pattern to help us identify where price might head to? And in this case here, the answer is yes, right? So if we look at this chart here, John, for Interact, I'm referring to John now in Sarasota out here, and all the other Johns that are listening in too. But if we do take a look at this, we get rid of profiles, what you and I can just clearly see, clear as a glass bell, because clear as a bell doesn't make a lot of sense. But clear as a glass bell, it makes more sense to me. And what we can see here is this nice consolidation pattern. And once a consolidation pattern is broken, what it does for us is it gives us a measured move price projection. So in the case of IAC, and you were looking at the risk reward out here, you would just go ahead and move that consolidation pattern to the upside and say, okay, your reward, your potential reward, where this is headed to, doesn't have to stop there. It's equal to or greater than, becomes 122.25. So if you're looking to trade this equity, that's what you need to look at. Now, this thing broke above the consolidation level with conviction, right? I mean, it doesn't get better than that. So the daily basis says, okay, we can see a bit of a retracement. So I would continue to watch this. I wouldn't get in on it right now. And thanks for writing, John. And I hope that helps answer your question. Now, there was another question from Tom out here and said, I exited JNUG in USLV yesterday at the close. Nice move there. I've been buying back all day today. How about this yen and dollar? So I think, Tom, that this message came in about 1:15, it looks like. And I'm going to I'm going to I'm going to assume that my other analysis during those first two segments really went ahead and gave you the information that you needed. And by the way, good move on buying. Watch that red line. Watch that in the GDX out there. Just use that as far as the level. And if you don't recall what that is or was, I'll give it to you once more out here. Let's put this daily chart. We'll put GDX. And as long as price stays above this level out here, that red line value of 22.97, then you're okay. If it gets below that, or watch gold and watch silver. You've got those numbers out there. Just watch those. Those will tell you which side of the trade, you should be on. So thanks for writing. And if that didn't answer the question, write back, and we'll figure out a way to do that. So I'm just going to check here as well, see if there was anybody else that wrote in. Nope, I don't see anything else out here. Okay. So AG SR, can you please talk about volume a bit? BFB, time to sell on high volume. My no-lose plan from last week sold yesterday on high volume. Okay, the question is, where is a difference between exhaustion and trend? You're asking, how do we identify a blow-off top? Is that what you're asking, Alex? Is that the deal out there? I'm not sure if that is your question. Yeah, that's a great question. So what's going to form this exhaustive top out there where you can confirm it? And I think you just have to look at patterns. You have to look at other type of patterns out there to try to understand that. Those other patterns can be the ones that we know easily to look at. Right, we've got those seventh wave movers, price moving higher, doing less relative energy, things of that sort. Remember, most markets do not end on wide range bars. Let's go take a look at this, anyways. BFB, right? BF.B is the ticker symbol of that Brown Foreman. Now that was a whole different thing. So, I guess to answer the question, you got to also look at the candle. That was the weekly candle. That doesn't look so good, does it? That was a few weeks ago. Is it Brown Foreman? Is that the stock you're looking at? Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. We're still taking a look at Brown Foreman Corp out here. And we're trying to answer the question, or the question that was posed was, how can you identify a blow-off top or blow-off move, an exhaustive type move out there? Sometimes we exchange these words, and they have a little bit different meaning for each person out here. And what I was trying to suggest is you really want to understand the different patterns that are also associated. What else is out there on the chart? Now, like, for example, and each of you know this because you were also asking the question about volume. So I'll tie it in this way. Inside the QQQ series ETF out there, and I'm only speaking about the Qs, The Qs make exhaustive bottoms with volume. The whole dynamics with regard to volume have changed inside of that ETF. You don't have to believe me, but you can go back to the chart and you go take a look at every single bottom that is out there, and what you're going to see for years, not like for a year, for years, you're going to see they're all associated with high volume. Now, sometimes not to the day. Sometimes it's off by a day or two. Most times it's truly to the day. And that is exhaustive. That is a signature inside of the QQQ series out there. It doesn't mean price is going to go back down there. It just means that's an exhaustive bottom, and that was a buying area. Now, likely that was the cause of all of these actions that are out there with all these companies that are buying back their stock. And they're all buying it back at about the same time. Those are the instructions given to the big boys. Okay. Another way that you take a look at it, because this is what's really being asked about this on a daily chart, which was from May 22nd. We saw a big wide-ranging bar and volume. It increased there, 3.8 million shares. And you even had a higher volume high out here on May 23rd. But it's the candle formation that really counted. And in this case here, if you just go back to the weekly chart, this is where it's so important to understand your previous levels of support and resistance. In the case of Brown-Furman, what we know because of the way that these candlesticks speak to us is back at the swing point from the week that began August 3rd, it was the following week that created the bearish reversal signal for us. And so in this instance, you knew that 55, 53 was resistance. You didn't know if it was going to get taken out. But when you saw a close below that level, which you did 2 weeks ago, you knew that that was strong resistance. Even though it's got high volume out there, and it will eventually get back there. At this stage, I like to use the expression that Tom coined out there, is you couldn't bust them up. So then what's it going to do? Perhaps it's going to go ahead and try and bust them to the downside. So the mere fact that you exited this trade, that makes sense to me. And this could be just simply moving all the way back down to the bottom into the 44 level. So look to buy this at 44. Use these different swing points as your friend out here, and the candlestick message, especially when you see reversal signals such as you did inside of Brown-Furman. So I hope that that helps you out, Alex, and welcome back from your hiking. Yeah, we can't really call that hiking, can we? What do you call that? Mountain climbing. Let's go take. We got one last thing from the last minute here. I see an email that came in from Rhodes asking to take a look at U.S. Steel. Let's go look at U.S. Steel. The question is about a buy point out here. Let's just leave this on the weekly time frame chart out here. Let me go ahead and see what the weekly market profiles look like out here. Your buy point was this week at about $20.19 out here. Now, if the trend has changed inside of U.S. Steel, you'll see a close above 23.46. That's what you need to see. Otherwise, that's your resistance right now. I don't know, Rose, I think for you it's mostly long-term trading out here. So I'd be patient and see what happens at the 23.46 level out there. That's just looking at the weekly chart. The other one was FCX. Let's see if I can do this in about 15 seconds out here. In the case of FCX, it's not looking that good, certainly from the weekly perspective. It could be bottoming here because it's coming back in that November 7th level, but the buy point on it, I'm going to change the daily. Let me see if I can come up with this real quickly. Pull back to 1117 would be the number. Hey, folks, stay tuned. Your favorite polar bear and mine, David White, is up next. Have a terrific Thursday. We'll see you on fabulous, fantastic, fun day, Friday. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching TigerTV.